You get an alert on your phone. A major tech CEO just stepped down. You open your brokerage app, hit sell, and congratulate yourself. You beat the crowd by seconds. But those seconds are an eternity. In the time it took your optic nerve to register the headline, millions of automated systems already scanned the text, parsed the sentiment, and executed trades. The price dropped before your thumb even touched the screen. For decades, the stock market was a physical room. It was loud, crowded, and throttled by human biology. If you knew something the guy next to you didn't, you had an advantage because information traveled slowly. And you needed that advantage because finance is strictly zero-sum. To buy a stock at a great price, someone else has to sell it to you at a terrible one. Today, that physical room is gone. The real battleground exists in dark, subterranean server racks where human intervention is a liability. Trying to win on instinct or reaction time is mathematically impossible when the actual competitors operate on the scale of microseconds. If you're reading a quarterly earnings report, you're already too late. Everyone on Earth receives that document at the exact same moment. It offers absolutely zero competitive leverage. To find an edge, large funds look for metrics a company hasn't officially announced yet. They look for alternative data. This means tracking the private jet flight paths of rival executives to predict a merger. It means buying commercial satellite imagery to count the number of cars in a retail chain's parking lot weeks before Black Friday. Machine learning models digest millions of these scattered, bizarre data points, crunching the variables until they spit out a single actionable command: buy or sell. And the instant that signal triggers, a massive wave of capital hits the market. Knowing the future is highly profitable, provided nobody else knows you know. But a perfect prediction is useless if someone else beats you to the exchange. To guarantee they are first in line, trading firms pay enormous premiums for co-location. They rent rack space inside the exact same data center as the stock exchange itself. To get data from Chicago to those servers in New Jersey, they must lay the straightest possible cable. Mountains are drilled directly through. They bury hundreds of miles of dedicated fiber optic lines through the dirt, creating private highways optimized for nothing but financial orders. Eventually, even a perfectly straight fiber cable hits a physical limit. Light travels about 30% slower through glass than it does through a vacuum. To shave off those missing fractions of a millisecond, firms built enormous microwave towers. They beam the trading data straight through the open air. The sharpest economic analysis doesn't win the trade anymore. The winner is whoever manages to bend the laws of physics just a tiny bit further. There is a fatal flaw in this system. When a high-speed algorithm finally executes its trade, it disturbs the market, leaving a microscopic data footprint behind. Rival algorithms are constantly scanning for those exact footprints. The moment they detect a successful pattern, they reverse engineer it. This is a chart showing alpha decay. When an algorithm discovers a lucrative discrepancy, the resulting profit margin spikes. But as competing systems copy the strategy, that margin rapidly crashes to zero. The edge vanishes. The original firm has to scrap their code and start hunting for a totally new anomaly in the market. An advantage is never permanent. It is highly perishable, requiring a constant, exhausting cycle of reinvention just to stay profitable. Zoom out, and you'll see the sum of all these ruthless, invisible wars is actually a hyper-efficient network. The market digests global information almost instantaneously, reacting like a single massive organism. These algorithms are fighting over holding periods measured in fractions of a second, but a retirement account grows over decades. Trying to day trade against billions of dollars of microwave towers and machine learning models is a guaranteed loss. The only winning move is to refuse to play their game entirely. Let the algorithms fight over pennies in the dirt. For everyone else, the real financial edge is simply long-term patience.